Sarah, thanks very much. The Federal Reserve expanding its municipal lending facility is coming after some criticism from cities and counties and cities that were left out of the original terms. They're now saying that counties with 500,000 people or more can apply to this lending facility from the Federal Reserve. That's down from 2 million, and cities with just 250,000 people in it, and that's down from 1 million. The idea is it vastly expands the universe of cities and counties that can now borrow from this Federal Reserve facility, which they, by the way, expanded to 36 months terms from 24 months. They haven't, though, increased the amount of money in it. It's still a $500 billion fund, but more entities are now eligible to borrow from it, including multi-state entities. For example, like the Port Authority could go with its bonds and finance for a short term its bonds there. Sarah?
I think it's interesting, Steve, that there's a current debate right now on Capitol Hill about whether to lend money to the states, with Senate Leader Mitch McConnell saying no, let them go bankrupt, and the blue state versus red state, and how much income do the states really need right now. And here comes the Fed in to save the day. Obviously, it's different when it comes to stabilizing the muni debt market. But how does that actually get to help these municipalities?
So it's going to be a place where they can borrow and borrow perhaps more cheaply than they could in the market. But, Sarah, we're just beginning this process of how to help municipalities here, and the Fed is just one piece of it. If you think the argument over lending to small business has been kind of ruckus, wait till we get to this debate about how much money the states are going to need, including their costs for medical care and hospitalization, along with the tracing, along with the testing, not to mention the whole other side of this, which this Fed thing is supposed to address, the massive drop in revenues that are just from every single corner. Policemen not writing tickets, tolls not being taken, and, of course, the drop in income and sales taxes that's going to hit a whole bunch of places. So we're just beginning this process, the Fed putting $500 billion forward, but it's not going to replace what's going to be needed from Congress.
Steve, I guess it's a significant change from them, but not a huge change relative to what they've been doing in recent weeks and months. But nonetheless, it does again show that they're listening, and that in part speaks to the relative calm that has returned to markets compared to the month of March.
Well, thanks for the reality check on that. You're absolutely right to make that point, that this is something the Federal Reserve, up until it announced this program on April 9th, would never do, that it forswore doing, getting involved in this whole aspect of lending to states, municipalities. It was something the Fed wanted to be at whatever double arm's length is. It wanted to be far away from this. This coronavirus has created an extraordinary situation of bringing the Federal Reserve into financing all sorts of things it never did before, including a high-yield debt, including corporate debt, all kinds of things. It's preparing this Main Street lending facility. So you're right. It's like I'm coming and saying, oh, this is the amendment to something that, oh, I forgot to tell you, is absolutely historic in its own right.
Steve Liesman, thank you for breaking in with that news.